It is that time again. Welcome everybody back in to Crypto's News. It's me, Omar Bam, aka Crypto, going ahead and collecting what is happening in cryptocurrency today to make sure that you stay on top of things. Please subscribe if you're new to the show, and we will be very happy to have you here, part of our live chat. I want to thank everyone who is here, part of the live stream, supporters on Patreon, YouTube. You guys are the best. Thanks for making it so it's not just me sitting here alone talking about crypto. I appreciate every single one of you guys. But yeah, it's a special day because we finally got a really nice move up in cryptos. We're seeing Ethereum back over prices we haven't seen since before the merge, back on like September 15th. We have Bitcoin over $20,000, hoping we stay there on just a crazy move that came out of nowhere and surprised a lot of people. Is it the big move? I'm not sure that it's the big move, that unless, of course, we close outside of this range. We have been pretty range bound and very tight recently. But if we do stay here above that for, I say, a few days and maybe through the end of the week, then that would be a great sign that maybe it's going to be a good time to be trading crypto yet again. So we're going to be taking a look at that and some other news that I've collected, since we just enjoy talking about crypto here on the show. I invite you to grab yourself a nice beverage, a nice seat, and we'll be just going through some of the main topics of the day. So let's start off. And, shout out to you guys who are still here, because it's a bear market, and I bet there's a lot of people who will be missing when we do get some really groundbreaking moves. They just will not be around. They won't be paying attention. And that's why it pays to hodl and to at least be paying attention through the bear market. So glad you guys are doing well for yourselves. So we have Bitcoin, as you can see, up now 3.9%, $20,090. We have Ethereum up 8.7% currently at 1,460. Although they were both up before you had Ethereum actually breaking $1,500. It was up to like $1,509 at one point, up 12%. It's tapered back. There have been some suspicions that it will not be able to hold up, especially when this move started happening this morning. People were like, well, I imagine it probably will be quite short-lived. I can't really see it holding up very well. But so far, it has held steady, And it has resulted in quite a lot of liquidations, as you'll look at in a moment. But I guess the biggest winner here on the first page is Cardano. So if you're holding Cardano, then your patience is being rewarded here. It's currently up 12.6%. And the market caps for crypto are back over $1 trillion. And we are still seeing pretty low gas prices for ETH, which is nice. So it looks like there was some sort of automation or something happening here, because as you can see here, posted by Delphi Digital, right when the price took off, there was a $500 million Ethereum perpetual swap that was bought. Although that eventually did settle, as was noted here. There were $80 million in short liquidations on that move alone. Open interest did move back to pre-move levels. But the price did stay elevated, so it couldn't have been just attributed to this, I would say, although some amount of buying did come in afterwards. This shouldn't have been too surprising that we saw this move in crypto, since they have been a lot more correlated, as you're probably hearing, with stocks. Stocks have been moving for the last 3 days, and you had the Dow Jones, the S&P 500 today up over 1%, and you had the NASDAQ up over 2%. So not too much of a surprise to see that cryptos are following the tech stocks to the upside, at least that index. Ethereum did outperform Bitcoin, as you saw here. So the ratio is looking pretty sexy. Just wanted to point that out. It is considered a buy now versus Bitcoin on TradingView. Although Bitcoin is just holding itself up so well, as really the main, I guess, chart that you could be looking at that has been most accurate through a lot of these periods so far, it hasn't really broken, is a Bitcoin rainbow chart. I did take the opportunity to post that on Twitter so people could take a look at that, but it is bouncing off that lower bound there, the blue area, and basically a fire sale. So if it continues up higher, this is just going to ring true. I mean, it would be pretty nice to see Bitcoin get back into the reddish territory. And if that did happen, let's say here by December 25th, it would be a Christmas story. I'm just arbitrarily picking a date, right? Let me see. Where was that? It was right. We missed it. We had it for a second there. Oh, man. Now I can't even get it. Well, we would still be over $290,000 for Bitcoin. There was a Kraken intelligence report. I haven't had a chance to sift through it, but I did hear about it. And it was noting how on their own estimates, you could see Bitcoin potentially at the higher bounds hitting over $320,000 and Ethereum hitting $28,000 into this maximum bubble territory that they were looking at. So there are still some gains, is my point, with some of the big boys in crypto to be making. Of course, there's going to be opportunities in altcoins. I really can't see other asset classes outside of crypto where the opportunities are so apparent and so readily available in some sort of bull market. And it's, I think people are getting concerned. They're like, okay, bad news, market goes up. Good news, market goes up. Something seems to be broken here. And I guess that could potentially be a bad thing, because if you have Jerome Powell waking up and noticing, okay, well, despite all of our rate hikes and all of what we're already doing, markets are still moving up, stock market specifically, then I guess that leaves us room to hike a little bit more aggressively. I guess that would be the negative case, and that could potentially bring Bitcoin back down. But it doesn't look like cryptos really want to be selling off much here. And to me, it could be a sign that you have institutional buyers and those waiting on the sidelines just waiting to get back in. So that could be a lot of what we're seeing here. But I did find today that maybe the reason we are pumping is because of this activist here who shared this fine video on Twitter for us today, the Dev. Let's take a look.
What, you think this is a big deal? You think ruining art's a big deal? People can't afford food. We're entering a global recession. And worst of all, people keep getting rugged. That's why I made DBI. It's a coin for the people. Nice and safe.
Safe.
Stop worrying about artwork. Start protecting your bags.
That's obviously a joke about the two girls from Just Stop Oil, which sounds strangely, they're called Just Stop Oil. It's a group on Twitter, but it sounds strangely like Gestapo. And they had gone to a museum and thrown tomato soup at a Van Gogh painting and glued themselves to a wall to raise awareness for climate change. So if you had missed that, that's basically what this is making fun of. But I also appreciated this video that the dev made last week. So it's not just DBI coin that they're working on. They're working on plenty more, potentially even an exchange. So check it out.
He's been diving since 4 in the morning.
This one's gonna be big. It's a website where you can buy Bitcoin, but you can't sell it.
No sell button.
Only one button.
It's like a Coinbase, but way better.
You can't even transfer Bitcoin off a site. You have it though, trust me.
It's pretty much a cold storage wallet.
It's an honor system.
This is the best dev. Better believe it. He's been diving.
I have a theory that plenty of, especially the smaller crypto exchanges, are working like fractional reserve and they don't have the full Bitcoin. So kind of like Celsius, they're kind of running Ponzi schemes, but at least they're a little bit more honest here. And yeah, Mo Jake, I was gonna think about reaching out to them for a sponsorship. I mean, it looks totally legit, right? Anyway, this was an illuminating story that I found that was being shared yesterday that I thought you needed to hear about. There are constantly different ways that folks are trying to scam in crypto, and it looks like Marco Paladin seems to have discovered another one. So he's kind of like someone who digs into different DeFi applications, messes around with them, and tries to understand how the code works, see if they're risky and whatnot. And he encountered one kind of situation that I hadn't really considered before. So I'm gonna just go ahead and read through this and you could take a look. A story on how I, as a Solidity auditor, Solidity is a language for Ethereum programming, just almost lost 10K in a single click. And on how you most certainly would have lost it. Learn how to not get wrecked like I almost was, and why you should always inspect transactions below. He wrote, so I enjoy farming the degenerate yield farms, the degen yield farms. Auditing, staking, spotting, and avoiding rugs in wilderness contracts is what keeps my mind sharp and my auditing game on point. Yields are crushed. Yeah, they're nowhere where they were back in the summer of DeFi, but I still enjoy it a lot. Anyway, he finds this degen farm at stabledoing.finance. He deposits $10,000 basically onto this. And he notices at some point when he was about to do some sort of function to withdraw that his address was different on the withdraw. So he was like, wait a second, that looks really freaky. That really only happens when I, for example, could have had some sort of malware, or I could have been hacked or something, where that kind of change happens through MetaMask. So he freaks out, he takes a break, and then he goes and tries it again to withdraw liquidity using a smaller amount of funds. So withdrawing, like, let's say only $10 this time. Although he was able to use some other program to take all his money out because he knows what he's doing, he then tried to withdraw a smaller amount just to test things out, and it didn't change his address at all. So he thought, oh, this is super weird. Like maybe I just didn't see the address right, and it was my legitimate address the first time I tried to withdraw. And he was like, wait, no, my eyes don't deceive me, at least right now. It's showing the proper address. He tries to withdraw a larger amount again, like the $10,000, and again, the address just changes and looks really strange. Then he starts testing this different amounts. Long story short, basically he finds this at $6,000 when he tries to withdraw, rug pull. $1,000, no rug. $5,000, rug pull. $3,999, no rug. $4,001, rug pull. So he finds out that the front end he was using had it hard coded that after a transaction tried to withdraw $4,000 or more in a transaction, that's when it would initiate project rug pull. So an evil genius here. He wrote, if everyone gets rugged by their swaps, people quickly ditch the project. If only 1% get rugged, however. So anyway, he found this out and I thought it was interesting. You always have to be super careful. Yeah, double check everything. He says if you can, always check the bytecode of the transaction you're interacting with. If it's to a contract with a larger allowance, always check what you approve and only approve what you need. There's another hack. I believe I've mentioned it before. MetaMask hack, I guess you could call it an exploit, whereby you approve a function when you try to interact with one of these decentralized applications that approves them to spend your entire wallet. So you have to be very, very cautious when interacting with these things, even if it's just for educational reasons. And save all addresses, he wrote, you have large stakes in using MetaMask plus a spreadsheet. So anyway, I thought that was an interesting lesson. I just wanted to pass that forward to you guys. Thank you so much. Much love. Be mindful of love going with your name. Thank you for joining me here. People are pointing out, this is Michael Rihani, who is the project lead at Cash App, that you can now use Cash App not only for sending with the Lightning Network, but now you can always receive with the Lightning Network, unless of course you are in New York City. But it is available to customers in the United States where, yeah, you can now receive in the Lightning Network for Bitcoin. So it does continue to see some increased utility and, I guess you could say, adoption. To throw a bone here to the hardcore Bitcoin maxis who would much prefer to use the Lightning Network than any other altcoin. And speaking of the Bitcoin maxis, let's take a look at this by Justin Bonds. I think he really summed up here why maximalism even exists. BTC's toxic maximalism stems from a deep insecurity, a lack of confidence that the free marketplace of ideas will support Bitcoin. Censorship has been rampant. Expressing opposing views will get you banned. Yeah, I'm banned from the Bitcoin subreddit. Actually, I might not be banned anymore. I think it was a temporary ban. I have to double check that one. But anyway, instead of argument, there is attack. Instead of change, there is stagnation. I think it makes a lot of sense here. It does stem from a lack of trust, I would say, in the free market, which is interesting. So instead, they have to take things into their own hands and protect all the noobs from all the altcoins. But that tactic just hasn't seemed to work out very well. Anyway, I thought that was an interesting point. I'd love to know what you guys think about that. So there was a poll that took place that I think further centralizes MakerDAO. It's something that kind of got me less interested in the project over time, even though it was one of the projects I was most bullish on early on after Ethereum. They have recently passed a poll. 75% voted in favor of it. This was a poll for a proposal to the DAO by Coinbase Institutional that would allow Coinbase to custody $1.6 billion worth of USDC that Maker is holding, and Maker is the largest holder of USDC, to park that on Coinbase with their institutional grade security and allow that USDC to earn a 1.5% yield. Woo, for the DAO. This did get approved, as I mentioned, and this was announced by Coinbase on their blog today, as you can see here. This is going to be a pilot program that will be going through the end of 2022, and there will be another vote to see if it continues after that. More centralization. Whatever. I think it is at odds with what Rune Christensen, the founder of MakerDAO, had said in what he had basically seemed to be advocating for, perhaps removing USDC as a key component for DAI, because now that USDC is just providing even more value, it might be more difficult to divorce away from USDC, would be my suspicion. This is something that's been coming up over the last 2 days quite a bit. I guess people didn't have much to talk about. So instead they were chatting about Apple and their stance on NFTs. In the new guideline, there have been calls for Apple to clarify on NFTs and usage within the App Store, and whether NFTs would be exempt from the 30% fee that is charged to digitals. So this really only applies to digital things. So if like you use eBay on Apple's lines and then you buy some sort of product and you get it delivered in the mail, Apple isn't going to take a 30% cut. But when it comes to digitals, like applications, when it comes to NFTs, those are not exempt from that 30% fee. I don't know. It seems like a weird move. But anyway, they wrote here an updated set of guidelines on October 24th at developer.apple.com. And they did give more clarification that NFTs, however, are allowed in certain fashions. They wrote here, apps may use in-app purchases to sell services related to non-fungible tokens, NFTs, such as minting, listing, and transferring. Apps may allow users to view their own NFTs, provided that NFT ownership does not unlock features or functionality within the app. That's interesting. Apps may also allow users to browse NFT collections owned by others, provided that apps may not include buttons, external links, or other calls to action that direct customers to purchasing mechanisms other than in-app purchase. So you can't direct people to like go outside and pay directly through crypto for these NFTs. They have to go through Apple's services, and Apple is going to get that 30% cut per the rules every single time. And this isn't being super well seen by the cryptocurrency community right now. Also, SBF is back, Sam Bankman-Fried, in the news, and this is related to an API hack that took place at a fake website pretending to be a trading service, automated trading service website called 3 Commas, and they basically pretended to be 3 Commas, use FTX API keys on behalf of some users who were duped into thinking that was the real site, and then they got hacked. And SBF is going to be making those funds whole, which is kind of weird. I've never seen this happen because of some sort of API hack. So there has to be quite a bit to this story that I don't think has been fully uncovered yet. But anyway, on October 23rd, SBF wrote, anyway, recently a frustrating thing happened recently. We've mostly stamped out sites that try to phish users by masquerading as FTX, his exchange, but we can't fix fake sites impersonating other services. A few users accidentally registered at fake other sites, including 3 Commas. They provided their FTX API keys to use the site's trading tools. So rather than, for example, going to trade directly in FTX, you could import your API into some other service so that it could trade on behalf of your account. It uses private keys, very much like you might be familiar with your own cryptocurrencies in order to do this if you're not super familiar with APIs and how those work. Others users were probably phished through other methods, but one way or another, these users were exploited by third-party attackers. In general, there's very little we can do about this. Other sites can fail to squash phishing attempts on them, and users can ask to let those other sites control their FTX API keys. This happened to other accounts on other exchanges. 3C was connected to as well, for example, Binance. Mostly it sucks, and it's something we should be fighting as an industry. Right now, each company has to separately deal with phishing, and it sucks. FTX has, but others need to as well. Anyway, not only was, there you go, Sam, trying to speak for the whole industry and for others as well. I think Sam should probably stick more to his own business and himself. I guess he probably thinks that he's just grown so successful and such the bastion of knowledge and truth in crypto that he can speak and advocate for advice to others. But anyway, not only was this not FTX getting phished, it wasn't even an FTX site. And in general, we can't compensate for users getting phished by fake versions of other companies in the space. It is an FTX, and we have basically no control over it. But in this particular case, we will compensate the affected users. This is a one-time thing, and we will not do this going forward. This is not a precedent. So I guess it was an attempt to get a quick PR boost off of this, but we will not be making a habit of compensating for users getting phished by fake versions of other companies. I don't understand why it's being done specifically in this case. Anyway, they're going to do it this once. He wrote roughly $6 million total. So that's not a super small amount, right? Like there was some other DeFi hack, I think it's called Quick Swap, that took place today. And in that hack, it was only $220,000 that was hacked, and he is giving $6 million to users who were phished on a website of API keys that happened somewhere else. And yeah, when this happened with Binance, all Binance did was, I'm pretty sure, lock APIs and make users reset them. They didn't compensate everybody here. I don't think they even did that out of the insurance fund, the Seifu fund. So this is weird to see going on right now. Anyway, SBF says, maybe a time to try out the 5.5 standard on 3 Commas phishing scammer. If they send back $5.7 million or 95% of the scam funds within 24 hours, he had written, to this address, will absolve them. That did not happen. And then posted the addresses. Anyway, this was the post by 3 Commas, who was a website that had a fake version of them spring up. And they had really only heard from a few, was 3 users who had problems they had written here. I'm losing it right now. There are only 3 users claim to have been affected at this time. I'm not sure if that number did go up, but it's quite a lot to give out from FTX's behalf. $6 million to 3 users who made this mistake, since phishing attacks happen almost daily. Anyway, there were apparently individuals on 3 social media channels that were claiming to be victims of the phishing attacks who were verified as not 3 customers. They are making claims that are factually inaccurate and confusing to users. I wonder if that was the hackers just trying to sow further discord, or just hangers on trying to take advantage. It's always hard to tell in crypto with the amount of scammers that are out there. But anyway, that was one of the trending stories, so I wanted to share that with you guys. Also, yeah, there's something that seems a little bit suspicious there about that. But anyway, the $1 million question, CFTC chair on regulating crypto alongside SEC. So Rostin Benham, the current chair of the Commodity Futures Trading Commission, spoke today at a Rutgers Law, Wall Street Blockchain Alliance, and Lowenstein Sandler event in Manhattan. And he did re-emphasize that the CFTC views Ethereum as a commodity, despite the SEC, the head of the SEC, Gary Gensler, having hinted that Ethereum may be a security, although he didn't say it explicitly in those words. Right around when the merge happened, it just seemed quite suspicious that basically the day after the merge happened, he came out, and that's kind of what caused supposedly the Ethereum price to drop, although people were expecting to sell the news around the merge. Gary Gensler was being pointed as for being the catalyst after remarking that basically Ethereum may be a security, or that things that operate under proof of stake may be securities, right around when Ethereum did that shift. But anyway, he talks about here, Rostin Benham, the chairman of the CFTC, that despite their differences, they might have to find ways to continue to work together, the SEC and the CFTC, that despite people thinking it would be a good thing if cryptos were regulated as under the CFTC, that might not be the case, because looking at their track record for enforcement, they are quite stringent and will be continuing to do that. And that they need more money, basically. They need more funds in order to do more enforcement. Although it is easier to comply from everything that I've seen with CFTC rules, and that could generally be better for compliance for tokens. So I think that's why the crypto community wants to see this happen, assuming that they're not, of course, scammers and fraudsters themselves and their legitimate projects. That's perhaps why they would want to see the CFTC having more oversight rather than the SEC over these kinds of projects. This was something else that came out yesterday, and I didn't make a video, but I wanted to give you the opportunity to consider this as well, by Miles Deutscher, who has taken it upon himself to remind us that if you have interacted with Arbitrum, I'm sorry, these second layer, sidechain, whatever you want to call it, for Ethereum, that you might be eligible for a potential airdrop that is coming up soon. He said people made $10,000 to $50,000 from Optimism, from having messed around with Optimism before that token was launched, and Arbitrum is next, so you might want to take a look at this thread. I did retweet it yesterday if you want to find that, and maybe look through some of his suggestions here. For example, you could just interact with some of the different decentralized applications that exist on Arbitrum. There are over 100 of them that you can interact with them, 127 decentralized applications. Like personally, I've used GMX myself. Or you might want to participate in Arbitrum Odyssey, although that is currently on hold after some issues. Basically, you complete some tasks to win NFTs, and if you had done those, that might make you eligible for the airdrop in the future. We're not entirely sure. We're not even sure if this token is coming out, from everything I know. But just in case, it might behoove you to go ahead and consider that, because these airdrops can be quite valuable, and they might be quite valuable, especially if we enter some sort of bull market, because $1,000 could be $10,000 like in a year or two from now. So keep that in mind. Anyway, just something to consider there. That could be a very huge one if Arbitrum does launch that token. And just wanted to remark on this. I'm not going to go through this story very much because it is massive. It's 40,000 words massive. Just to show you guys, it was the first time that Bloomberg had done an entire issue of their Business Week on one article, and this one was specifically about cryptocurrencies, praising the good, dismissing the bad, or not dismissing, but talking about the bad and pointing that out, and the potential futures for cryptocurrency, comparing them to databases and how this is the future of them, which uses finance potentially, and how despite it being a bear market and a weird time it might seem like to write this article, it's actually the perfect time to be digging into what is serious and pertinent in cryptocurrencies right now. But yeah, I think it's interesting that they basically had Matt Levine take all this time to write solely about crypto, one of the main finance writers for Bloomberg. Again, 40,000 words. What they wrote here in the intro was, there was a moment not so long ago when I thought, what if I've had this crypto thing all wrong? I'm a doubting normie, wrote Joel Weber, the editor for Bloomberg Business Week. I'm a doubting normie who, if I'm being honest, hasn't always understood this alternative universe that's been percolating and expanding for more than a decade now. But if you're a disciple, this new dimension is the future. If you're a skeptic, this upside down world is just a modern Ponzi scheme that's going to end badly. And the recent crypto winter is evidence of its long overdue ending. But crypto has dug itself into finance, into technology, and into our heads. And if crypto isn't going away, we'd better attempt to understand it, which is why we asked the finest finance writer around, Matt Levine of Bloomberg Opinion, to write a cover-to-cover issue of Bloomberg Business Week. Wow. Something a single author has done only one other time in the magazine's 93-year history, which is What is Code? I believe that came out in 1996 by Paul Ford. What follows here is his brilliant explanation of what this maddening, often absurd, and always fascinating technology means and where it might go. So if you do want to take the time to check that out, or maybe you're like a collector, maybe you like to collect really cool crypto things, this would be an issue that would be worthy of diving into. Anyway, that was pretty much the show. Didn't want to make it super long today, and hopefully I'll catch you guys tomorrow. Thank you so much for joining me, Renee Pop, and everyone else who is still here. We'll finish with the quote of the day, which is, I think, pertinent to you guys, the community, the crypto community who's always supported me. Thank you for that. I alone cannot change the world, but I can cast a stone across the water to create many ripples, by Mother Teresa. I like that. I like that one a lot. And it goes to show all the little parts that we're all playing in helping drive crypto adoption, which I think is truly an evolution of traditional finance and one of the only hopes, I think, for humanity it continues to be. Thank you for joining me. Take care. Much love, everyone, and stay cryptic. Peace.